Hello traders, let's talk about this price action that happened and some nuances to pay attention to, okay? Well, if you're a member of my group, you already know this. If you're not, there's some quick start guide videos on here that goes into some of the methodology of that I consider our core strategy. So I'm going to mark out some lines here of what price action should have looked at, what trade you might have been interested in. So this area here, then you get this major dump. So I want to talk about how to avoid when this major dump happens. You aren't trying to catch a knife and go long. Let me turn off this magnet tool. You're not trying to go long right there. You're thinking, oops, I'm going to take this bounce line right here, although you have a clear and present, beautiful bounce line. In fact, you have two of them, and it could be argued you might have three. So do you want to take those longs when when price is just vomiting? No, you don't. Hold on, I'm seeing my DOM light up here. Let's see. I'm in this one little MES trade right now. Hold on. That went away. Let me bring that back. Here, let's scroll over and look at what's happening. Hold on. I see my DOM lighting up here. Okay, good. We're taking that out. So let me show you this. Let me turn on cotton. This will go in a little bit of a different direction. So let me click my entry folder. I took that short, and I actually even took it on the second bounce, which is very, very rare, but here's why I did it. I'm going to switch to the 30-minute chart. I really like what this is looking like on the 30-minute chart. We're stair-stepping down. We're laddering down. We came up into a fair value gap and hit one of my bounce levels. It's my first trade this morning, so I did it small. I just did one little MES. And I'm kind of doing a 50% follow on this. So, it's at 40 bucks here. So I'm going to slide this thing down to 20. Now let's do this. I'm going to slide this off for a second. Let's go to 1 minute, because here's what I do. This is really good for the guys in the room. So enter this short. We're starting this nice little ladder down process. So what I want to do, let me go to the 3 minute. I want to build some protection layers between my entry and where price is, where price can go away. And when it comes back, where is it going to bounce price back into my favor? Well, I'm having this level, and I'm having this level where these would offer layers of protection, where if price came back, it's probably going to bounce off those and keep going down. Now, where will price bounce back into my face? Well, I've got a 30-minute level right down here on a 30-minute chart at this 20. So as it gets closer to 20, I'm probably going to tighten up my stop a little bit, because most likely what price is going to do, it's going to come down to here and it's going to bounce off of a major 30-minute level. So I'm kind of monitoring that. If I had multiple contracts, I would probably take like half off here and keep half behind one of my protection layers. So right now, I like to stay behind two protection layers, which right now appear, this is very small price movement. We haven't moved very much. How much have we moved since my entry? We're 7 points, so I'm up 7 points on it. Small, I like being a micros trader. It's my first trade of the morning. I kind of consider that like you're going to go out and throw the baseball with the sun. Well, you do the first throw a little easy. You don't want to throw out the shoulder. So this was my first throw, my first toss, my first lob of the morning, and was just being patient. That 30-minute chart really motivated me to just be patient and wait. So this 3830.75, maybe have my stop at 31.75. So what I'm going to do is I'm going to move this thing up to 31.75. Okay, because what price could potentially do, let's say it went down to here, it comes back to here, most likely it's going to bounce off there, okay? Or price could go all the way up to here and bounce. Now this gives me 2 layers of protection, and my stop is right above it. I like 2 layers of protection. You could say, man, George, you're really giving up a lot of profit there. I am, but I have seen 2 layers of protection give you trades up to 100 points. Depends on what price does. And I'm really liking how this is going away. I'm even building a next layer of protection. So, all right. I'm going to turn those off. Let's go back to what I was talking about. Sorry, I just figured you didn't mind a little bit of trade talk. Okay. So these were my entries yesterday. I did very well. I shorted here. I went long there. I did 3 little longs down here going into that. And that worked well yesterday. Okay. That's not really the point of this video. The point of this video is I want to talk about how you avoid taking these longs that are perfect, legitimate longs in this vomit. Now, one of the patterns, and if you're in my group, you have access to that practice room. One of the patterns that we see often, I'm going to draw it out. Sometimes it's easier to see it visually like this. You have up, then you have consolidation, then you have, I just call that a vomit. I mean, that is just a vomit. You see this pattern often. You see it so often enough that you need to be careful when you're in this chop. Because, I mean, we very well could have went this direction, and you're still watching for those signs. You're watching for those signs of when this happens. So we're going to talk about that here. Now, one of the charts I put in my trading room yesterday. Hold on. I'm showing. Okay, good. We're still going down nicely. All right. This is what I put in my room. From that point south, from the highest swing high south, if you wanted to be the safest, what you're looking for are shorts only. Okay? So from this line down, I'm looking for shorts only. And if I'm to do the opposite from here up, we're looking for longs only. And I did those backwards, didn't I? Longs only. In this area where they intersect, you take both trades. I love chop. Our room does really, really well in chop. There's so many trades in here. We drop down to a 1 minute, 30 second, 15 second chart. You make a lot of money in here. But in general, I'm looking for shorts from the top of this line down, and I'm looking for longs from here up, and in the middle, we are in chop. So what happens is when price takes out one swing low, I teach in my room, that is stop, pause, wait. It takes out 2, you stop trading. And when it breaks out of the range, you do not take the very next trade. Just make that a rule in your life. When it takes out a swing high, or when it breaks out of a range is really what I'm trying to say. And it takes out at least 1 break level, you've got to at least pause. It takes out 2 break levels, you'd better really pause. And not take the next trade. Just wait for price to return to orderly conduct. How do I know when price returns to orderly conduct? When it starts bouncing off my levels again. Did price bounce off this level? Did price bounce off this level? No. So I do not have orderly price action yet. I am waiting till price starts bouncing between the intraday lines I have drawn. For example, here's a short. Did price bounce off my level? No, it didn't. So I know I do not have orderly price action yet. This would be a level. Did price bounce off? Yes, it did. This is another one. Did it bounce? Yes, it did. In this area, I'm interested in trading again. So until it starts bouncing off my intraday levels, I'm not interested in trading again. I need orderly price conduct. Orderly price conduct with my system is a money maker. You just have to be patient. You have to know when not to trade. So here is a really good rule right here. From the top of chop down, shorts only. From top of chop up, longs only. So when price vomited down like this, the only thing you should have been looking for are shorts, not a bounce trade north. You're only looking for shorts. And you know what? You got it in spades right here. If you took this trade, you stayed in it all the way down. That was a 48-point run. 48 points. Because you were thinking the correct trade. Shorts only when we broke out down. Same thing if the opposite would have happened. What if price would have done this? Then this. What are you looking for? What are you looking for? If you're in my room, you're looking for longs only. I'm not looking for an existing line that might have been up here and, oh, I want to go short. We're not taking the first short when we break out north. No, I don't care if the line's there. Just delete it. Just delete it. I'm waiting for a nice short. I'm at a nice long now. It breaks out up here, long. We break out down here, shorts. It just really clarifies the thinking of what trade you should be looking for based off price action. Hey, let's go back and look at my trade real quick, and then we'll end this. So this is Wednesday morning. All right, so let me turn back on my lines here. All right. Oh, we're getting close to this 21. Got two nice double protection layers. I'm now up 10 points, which is nice. We're getting close to this 21. So I think I'm going to, if I had multiple contracts, I'd be managing this a little different. Do I want to go ahead and just lock in 10 points? I think I might go ahead and just lock in 10 points. If it gets me out, I don't care. So close to where I think price is going to bounce anyway. Oh, there we go. I'm going to move it to 11 points. And there we are. And I'm out. Hold on and stop the presses. When I was editing my video, of course, I'm continually watching price action. And look what price did when it hit my orange level there. It did exactly what we said in 5 minutes ago. It was going to touch that orange line and bounce. And it did. An easy, easy long. All right. See you in the trading room.